The US dollar remains extremely vulnerable with another key week as we see US CPI come into the spotlight, inflation which is heading closer towards the FOMC rate decision. Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So dollar volatility remains intense, guys. You know, we just had a choppy week there on the back of the non-farm payrolls. It was a week filled with labor market data. If you have a look here on my screen, obviously the dollar actually did finish in the red after, you know, the week before last. As I said to you guys, we look like we're staging a rebound as we've seen signs of improvement with economic data. But this latest week not being great for the greenback when, as I say, we are focused very much on jobs data. JOLTS job openings here came in below expectations, only 7.67 million jobs being open, the previous revised down. And then we saw ADP, the privately conducted payrolls number, ADP employment change, only 99,000 jobs being added, the previous revised lower. And then look here, obviously the big focus was on non-farm payrolls reading, 142,000 jobs being added below expectations, and the previous revised lower to 89,000 from 114. And the unemployment rate cooling as expected to 4.2%. It wasn't the best, obviously, labor market report in terms of Friday, but just as a whole, there's clearly signs now that we're seeing some slowdown, some cooling in the labor market. And of course, that's this disinflationary, okay? Just focus on me in a moment. That's disinflationary. If people, right, if the labor force is worsening, i.e. we're getting less jobs being added to the economy, so that's less people out to spend money. If wages, obviously here, in this case, wages were slightly higher, unemployment rate was down, which was good. But generally speaking, we are seeing some cooling. And if we're seeing cooling in the labor market, just to make that very clear, then that's less people out potentially spending and stimulating the economy. Either way, there's a clear slowdown here. Now, if you look at the dollar, just want to point something out quite interestingly that I didn't mention last week. Now, on the monthly, when we look at the higher time frame, things remain bearish for the dollar index, right? When we just, if you just look at this on a naked chart, we left this wick in last month in August, which is expected to be filled. Obviously, we've come towards challenging those lows of the month. There's very key support around that sort of 150 towards 100 mark, that psychological area. And you can just see across here that demand that is has been supporting the price for quite some time, you know, while we've been caught in this awful range, you know. And obviously the lower part of that, you know, key next demand is just sub 100 here. Now, obviously, it's another important week ahead of the ahead of the FOMC rate decision. Non-farms was last week, ahead of the FOMC, because we've got CPI data, and CPI on a month-to-month expected to remain steady there at 0.2%. But the year-on-year, interestingly, we're expected to cool down quite a bit from 2.9, closer towards the FOMC's target of 2%, expected to cool down to 2.6%, which of course is disinflationary, gets us ready for rate cuts. Okay, so if we do see inflation cooling this week, which it is expected because we're getting signs of slowing down generally. I know we had that 1 week where the dollar bounced, but generally we're still getting slowdown on an economic level. So we are seeing, we have reasons to believe that we're going to continue to see disinflation. So inflation should come down here. Focus is on those year-on-year numbers, okay, over the higher time frame, over the longer term. See if that comes down, because obviously dollar could very well and truly be vulnerable to another drop, one final potential drop. And the reason I say it could be a final drop, guys, let me make this clear, is because, okay, regardless of what happens with the FOMC, whether they surprise us with a 50 basis point cut, which I think is kind of unlikely in my opinion, okay? If they just cut by 25, that's where the dollar will bounce, okay, in my opinion, because markets have 100% up price it in. Where I think the dollar could bounce in the future, in a not so distant future, is you see how we're getting markets panic selling. They're selling the dollar, right, on the back of poor data, and they think, oh, we're going to have a recession, right, in the United States. But they're just so focused right now on US dollar, FOMC. At some point, when we start looking at other data points, other economies such as the Eurozone, when we start looking at, you know, Canada, when we start looking at the the UK, if we see signs of slowdown there, right, then it's a global slowdown. It's not just the US. We don't just sell dollar. And remember, the dollar is the reserve currency of the world. So do you think the dollar's going to carry on being sold when we're seeing an economic slowdown in other major economies? No, that's where the dollar thrives. That's safe haven bids. The dollar is linked to the largest economy of the world. The dollar is the reserve currency of the world. So at some point, those safe haven flows will pick up as well. Okay, so another big week for the dollar this week. Focus very much on the pound as well with key labor market data, this time from the United Kingdom. Okay, when you look here, we will keep an eye on Tuesday where we've got the claimant count change. So that's the amount of unemployment claims in the latest period, which is expected to cool down actually to only 95.5 thousand. The previous number was 135,000. The average earnings, which is very important, is expected to cool quite substantially to 4.1%. I think that's quite a drastic drop, which I don't expect to see myself. You know, from 4.5%, which obviously, if we get a higher number, that's still inflationary, right? If wages are higher, what do you think people are doing with higher wages? They're spending, keeping inflation somewhat sticky. And the Bank of England have approached, remember with their last rate cut, they approached it with caution, right? Because they still see risks of inflation spike. So obviously if average earnings remains high, that's a risk of inflation then being spiked to the upside because of decent wages. We'll also keep an eye on GDP, which expected a decent number. We saw GDP in the latest reading holding steady, okay, it coming in line with forecast, not as bad as what it could have been because there was fears that the UK was really slowing down. So we expect to see a decent number on a month-to-month basis to 0.2%, which I wouldn't be surprised if that does come out of that because data generally remains steady in the United Kingdom, you know, of late. So would like to see a good number there. With that being said, just taking a look specifically at GBP dollar on the monthly, right, we've been trending to the upside. We've had a great performance with the pound, really one of the best performers against the dollar, really leveraging that dollar weakness when you look at GU, trending to the upside. Obviously, in the latest couple of weeks, we have been cooling a little bit, but price action still potentially subject, okay, let's see. Obviously, it depends what happens with the dollar as well in this week, but we've got heavy amount of demand here protecting that psychological 131 mark. Obviously, if you could just see here along that dotted line, look there, there's a lot of support protecting 131. So long as this holds, we had a bit of a breakout with flag here, potential retest. As long as this holds, we can get some dip buying and then we can go and challenge obviously these highs, okay, of September and go and move into 133 territory. Obviously, if that data disappoints and we get that stronger dollar, obviously there's risk of this slipping below and then having a bit of a deeper correction. We'll test this mid 30 region and then further south, we'll be heading sub 130 into 129 territory, okay? I am more in favor of potentially seeing some upside. Obviously, again, so long as this data supports its remember, this is just me looking at as a base case, GP versus dollar. You can look at GP versus other pairs, you know, if you see some divergences there on an economic level, but focus on this data on Tuesday and on Wednesday. And then another highlight of this week, focus on Euro, where we have a central bank decision, the ECB rate decision, where they're expected to cut rates. If you look here, expectations, rates are currently at 4.25%. The forecast is for them to cut down to 3.65%. Now, obviously, the Eurozone has been somewhat slowing down. We've seen inflation levels coming down. Look, let's just bring up the latest CPI reading just so you guys can see. I want to go to CPI. Let's just bring up German because on that, yeah, if you look here on that week, we had German inflation cooling down to negative 0.1%. So deflation there. So it's quite a substantial drop from the previous of 0.3. We had Spanish CPI as well, dropping down to 2.2% from 2.8%, so a big drop. And then on a Friday of that week, we had the Eurozone CPI as well. Let's pull that up here. Okay, the Eurozone CPI, which also cooled, look here, 2.2% from 2.6%. So overall, inflation clearly slowing down there in the Eurozone. Now, let me just bring it back to this week. Okay, so we have a potential economic slowdown. We have inflation cooling in the Eurozone. So we have every right, well, the ECB has every right to start lowering interest rates. Whether they do it drastically to 3.65%, I'm not sure. I'm more in favor or more inclined to believe that they will just cut by 25 basis points and maybe another one comes at the following decision. You know, not going for such a substantial cut this time around, okay? With that being said, when we look at Euro, obviously on a monthly, on the flip side to what we observed at the Dixie, big bullish candlestick there in August. We've left room to carry on and push to the upside, potentially fill this wick, head into that psychological 112 area, sort of the upper part of that. On the monthly, obviously, again, just sort of choppy price action on the back of the dollar index at the moment. It's going through a bit of a choppy time, heading into FOMC on September 18th. Is the 18th is the next FOMC? Yep, September 18th, just double checking. And obviously here in the week, we finished in the green. I think there's risks potentially to the upside for euro dollar for maybe not to get a big as cut as what market expecting there for rates to drop down to 3.65%. I don't think that will be seen. On the daily here, similar to GU, we found support, right? We've got support here at that sort of mid 110 region, around 110.40 towards 110.50. Found support there, and then broke out a bit of resistance here. If you see around that sort of 110.70, look, where we're cap. We had a little breakout retest. Look, it's similar to GU, right? This psychological 110.50 area is key for me. So long as this holds and we don't get a breakout to the downside, we could go and trend and move to the upside like this and move into sort of that 112.50 territory. Okay, if we end up getting a surprise from the ECB and they do cut, in line, well, if they do drastically cut rates and leave the door open to more, right, which would obviously be dovish, Euro's going to tank. Okay, we're going to see quite a sharp drop. If we look here on a higher time frame, Euro, when you look here to the left, Euro's got a lot of room to just travel to the south. I'm just going to put another zone here because I haven't obviously been in trend to the upside, so I haven't got another zone marked up. But if we look left here together, for me, it would be here. It'll be coming down to 108. So we'd head all the way down to 108 if they do cut, as expected there, but are also dovish, leaving the door open to more cuts, maybe back-to-back cuts, then Euro's going to really tread to the downside. But I just don't think they will. I think it's sort of, let's just do gradual easing, nothing too aggressive. And we'll take each meeting as it comes and review data. That's what I think would make more sense and what I see. So that's why I believe Euro could potentially trend and carry on pushing to the upside this week. But again, it is very much dependent on dollar. You see how you got to have your finger on the pulse with these fundamentals at the moment, guys. So once again, we are filled with a beautiful risk events, plenty of volatility to come. Have a blessed and amazing week, and I'll catch you on the next video.